This is Leading Detection, a Sedulo podcast where fraud fighters talk tech. Welcome back to the Leading Detection podcast. And yeah, we're going to have some fun on the recording today. We're joined by Ben and we're going to be talking about everything chargebacks. Ben, thank you for joining us.
Thank you for having me. It's a pleasure.
Awesome. So yeah, a little bit of context for those who are listening. We're going to be talking about chargebacks, what they are, what they mean, and of course, with fraud, with humans being involved, how does that all come together? So yeah, Ben, chargebacks, lay the land, what are we talking about?
So technically originating in the 1970s, I believe, there were mechanisms to protect cardholders, right? For cardholders, when they do an online payment or a local payment, they will be able to have some sort of an insurance in case something goes wrong. And as everything in life, it evolves. And the more we have online presence and online shop, the more you see the usage. And also, generally speaking, the technology, because back in the days when you had to file a chargeback, you would have to probably print something, then write it by hand, and then either scan it or email it or even send it by email to the issuer. And nowadays, it's as easy as going to your banking app and just clicking dispute in most cases. No too many questions asked. And this leads to some negative behaviors, to be honest. So I guess that we're going to cover this quite extensively.
Yeah, so let's start with why it's there in the first place. What is the good use of chargebacks for banks, merchants, e-commerce sites?
I mean, let's say that someone actually managed to scam your card details and they started to do some transactions with your card, which you are not aware of, then your money is protected because of this chargeback mechanism. So if the fraud detection tools fail to cancel the transaction from taking place in the first place, then this is like an insurance by your issuer that say, you know what, it wasn't you. We know it wasn't you, so you're gonna be compensated for the lost financials. So that's the original idea. Or if let's say that you bought something, but then nobody delivered it, all right, or you got the wrong item or the wrong service, then you are able to dispute it essentially and be entitled to receive your money back. So technically, it means that if you bought something, you should get it. And you should get what you bought in a reasonable amount of time. And if you didn't, then you are somewhat protected in terms of at least you're going to get your money back. That's the original idea of chargebacks.
And where there's such options for people, there's going to be other people who are going to maybe take advantage of this. So when did the water start getting a bit murky?
Well, I think the bigger leap was around the 2000 when more and more online shopping became common, and with online shopping, it's just easier to claim something which is incorrect. Because when you go to a store, like a brick and mortar store, it's quite difficult for you to say it wasn't me, right? But when you shop online, it's very easy to conceal yourself behind technology and then have a probability of claim that this actually wasn't me. Yeah, obviously this is not black and white, right? And a lot of the chargebacks, or maybe not a lot, but some of the chargebacks are either correct or just a misconception or confusion. Because I can just give you an example. It happens to me quite often that I look at my bank statement and I see descriptors that I have no clue what they are. So it takes a lot to either Google it or reach out to the bank. But then I discover, yes, this is something that I made. This is just the name didn't make sense to me. So this is a common issue with merchants. And then they got unrecognized chargebacks, right? Unrecognized type chargebacks. But this is not because the merchant did something wrong in terms of this providing the service or the product. This is just a misunderstanding, let's call it. And then what happens when the chargeback is filed? Automatically, the merchant loses their money and need to provide proof that everything was legitimate. So this is just one part of it. So you're going to have real claims, real chargebacks that something went bad and the customer, the cardholder is really entitled for the money back. You got this in between, this misconfusion, or let's say that a family member did a purchase on your card, and now you
Yeah.
see it, but you say it wasn't me, but in fact it was someone, it was a legitimate purchase. And the
Mhm.
merchant, on the other hand, received the payment and provided the service or the product. So merchant did nothing wrong, but on your end, you filed a chargeback because we didn't recognize it. And the third part is obviously what we call friendly fraud. And it's a kind of a controversial name because how can you put friendly and fraud in the same term? But yeah, I mean, eventually it means that the legitimate cardholder made a purchase and then they still file a chargeback because they wanted to get the money back and keep the product or the service. Yeah, so that's the, and nowadays it is, by many surveys, it looks like about 70 to 75% of all chargebacks are friendly fraud chargebacks.
It needs a rebrand, doesn't it? Friendly fraud.
Oh yeah,
But it sounds like the systems are all in place. It's the
yeah,
human that's the big issue here.
yeah, yeah. The human behavior changed basically, and you could look back, for example, to the COVID time, right? Everybody
Mhm.
were segregated, everybody stayed at home, and
Yeah.
then online shopping went through the roof. And then this is where we started to see more and more and more friendly fraud chargebacks because people were at home, financials weren't the best at that time, and people thought, okay, this is somewhat an easy way to get my money back.
Yeah.
And yeah, this is
So someone looks through their bank statement, especially maybe in COVID times when you sat at home and you just see Amazon.com, Stripe subscription, Amazon.com, Uber Eats, and there's just so many transactions you can't really remember
yeah,
what they are.
yeah,
And there's a button there that says dispute,
yeah,
and you get away with it once. And is that when it starts creeping in? Maybe.
yeah. Well, to be honest, this depends on the issuer mainly,
Mm.
because at the end of the day, when you file a chargeback, the responsibility sits with the issuer to actually verify your claim. Because essentially what you're saying is, hey, Mr. Issuer, I used your card that you issued for me and something went bad, right? I
Mm.
tried to buy this, I paid, the money is gone from my account, but I didn't get my product or service. And the issuer should review your claim because maybe you provided wrong information, maybe you're trying to defraud the system, just maybe your case doesn't make any sense. I can give you an anecdote. When I worked for N26, it was back in 2019,
Yeah.
I had, back then, online banks were sort of like a niche, to be like Monzo and Revolut and N26. They were
Mm.
like a secondary bank account. They weren't the main
Yeah.
one. And people use them for let's call it maybe not main activities or financial activities.
Yeah. Yeah.
So they had very little amounts, and they used to try to find an easy way to get the money back. And I had a lot of instances in which I received a fraud claim. Someone reached out to us and said that their card was stolen. They made some whoever stole it made some purchases with their cards. And the first thing that I would do as an issuer is I would look at the customer. Who's the customer? How long
Mm.
have they been with us as a bank? How many purchases have they made? Did they buy in the same merchant in the past or in similar merchants? Just to understand if it makes sense what they claim. Because if the story doesn't make sense, then probably it's incorrect. And
Mm.
in some extreme cases, I would ask them to provide with a police report or an affidavit. And you would be probably maybe not shocked, but the amount of cases that dropped due to this
Mm.
is amazing. And this is only just another layer of friction. But if you really went on abroad and your wallet was stolen, probably you would go and file a police report. So it
Mm.
shouldn't be an issue to provide it, right? And the minute you say it and the case is incorrect or illegitimate, then they drop it.
Do you think that is always so say if you're on a city break for 2 or 3 days and you
Yeah,
lost your wallet on the second day,
yeah.
would you go to a police station and file a report? Is that what the fraudsters are kind of playing on, the
So
scenarios like that?
I mean, the fraudsters just want to get the cards numbers, right? And
Mhm.
run them as fast and as much as they can until the card is blocked. Because eventually what happens when you file a chargeback for fraud or unauthorized usage, then the issuer should investigate and then block your card immediately to stop, following purchases. Or the fraudster would like to get the card details and, just use it as much as they can before it's blocked.
Mm-hmm.
But yeah, I mean, this is what the fraudsters, at least back in the days, used to do. Now it's slightly more complex when we go into all the AI, which is going around in all cases, in all scenarios. Yeah.
So, I mean, removing AI from it, we'll talk about that in a moment. What's triggering this kind of moment for chargebacks and chargeback companies right now? What's causing this influx?
Look, as long as merchants gonna accept credit cards as a means of payment, you're always gonna have chargebacks. It's just part of the game. But we do see an increase of behavior from certain, people that just try to slightly more abuse the system than before. It just the ease of use just makes it just much more glamorous to just file a chargeback and get both the product and the money. So the more you have online shopping and just generally credit card shopping, you're gonna have more and more chargebacks, and the more easy it is to file a chargeback and get your money back, then you're gonna have more of these.
Yeah. And you've been in, you kind of see, you've had a good vantage point for a little bit of time now. Is there a rise in suspicious activity, but you can't really prove it? Say a really good customer and they've bought a $300 coat and they've asked for a chargeback. Everything is telling you, your gut feeling is telling you that that's a fraudulent case, but there's no proof. Are you seeing an increase in that as well?
Uh, It really depends on the setup of the merchant, right? Because the more protected you are, the better chances you're going to have to win a chargeback. But also, the more protected you are, you're going to have some problem with conversions, right? Because if, for example, you apply both, a CVV and AVS and, opening an account and maybe 3DS and other types of KYC related materials, then you're gonna for sure leave some of the money on the floor because people will just abandon the checkout or something. But then on the other hand, if you are too loose with these fraud prevention capabilities, then you're gonna have more fraud streaming through the process. And this is always gonna be the same. The nature of the fraud changed as we go, right? It evolved from it's not me, I didn't do it, to maybe my agent did something which I did not authorize, or I created a prompt for agent a few months ago and now it decided to execute. I didn't give it any permissions, and you are going to a different realm of data points and information that you need to take into consideration as a merchant if you want to be prepared to fight chargebacks.
Are we seeing that? I mean, what's your impression of agentic commerce?
So there's a race between the card schemes mainly. Visa, Mastercard, Amex are working quite closely to build the infrastructure for it, because at the end of the day, you are going to use the same rails, but you're going to have different or more additive information that you're going to share. Usually they talk about three main mandates. The first one is going to be the intent mandate, which is
Yeah.
what do you allow your agent to do on your behalf? The second one would be the checkout itself. And the last one is going to be the payment credentials or the payment approval. So all of these have many different data points within each one of them. And this information must be shared across, issuer and acquire, so that you could have a clear understanding and be able to do a correct decision based on the data. For example, by the way, it's not, I couldn't say it's really live, right? Visa and Mastercard are actually doing a lot of tests and are working with selected partners, but I cannot say that I have really seen real end-to-end agentic payment performed on mass scale. It's still in the testing phase. And there's a whole bunch of verification, authorization, and security related items that should be completed before they can produce a mass usage. But the idea is that at least these three main mandates will be shared between the issuing and the acquirer side. So everybody is aligned with what happened and when it happened and who gave permission to do what. And once you have the information as a merchant, you can utilize it as part of your representment, as part of your counterclaim, let's say.
So what does that mean for chargebacks? Because that sounds like it's a little bit messy.
Yeah, well, essentially it means that it's not going to be, I didn't do it, or not as described or something. It's going to be the agent or received my request and then did something else with it, or operated outside of its mandate. And now you got to a question of who's responsible. Is it the cardholder that created the prompt for the agent? Is it the merchant that accepted it? Is it the issuer that allowed the purchase to be made? Is it the agent platform, for example, OpenAI, or any other agent that is being used? Like, who's liable for it? And from experience in other topics, in other similar topics, somehow it always falls on the merchant. A good example is BNPL. Back in the days, there was the same thing, right? Because BNPL, what do they do actually? They allow you to buy stuff that you don't need with money that you don't have, and someone else does the sort of like installments on your behalf. So the merchant gets the money from the BNPL provider, and the cardholder actually pays the BNPL provider. So if chargeback comes in, who's responsible for it? Who's the merchant of record? Who's going to take liability for it? It's quite similar. And back in the days, again, there was an issue with, it mainly was decided on contracts, like actual contract between the merchant and the BNPL provider listed who's liable for chargebacks. But as with any type of new method of payment, you're going to have a long period of testing and, sort of like trying to see what's the best solution and who should be liable for what. But yeah, I mean, I wouldn't be surprised if the liability would sit almost solely with the merchants.
Yeah, it's just crazy how many layers we're adding in. Because if you think, 100 years ago, you went to the market, you picked up an apple, you gave some coins, and it could get to a point where it's going to be the person buying the product, their agent, going through an issuer, maybe even a buy now, pay later platform in the middle, an acquirer, and then the merchant. There's a lot of steps.
Right. So you can add another layer on top of what you just mentioned, because think about the fact that nowadays you have a fridge that knows what's in them, right? What products are in them. And whenever you take something out and you do not return it back, they know that something is missing. So let's say that this is connected to an agent that knows already to add it to your weekly or bi-weekly shopping list. So this would autonomously decide that you need an extra, whatever, cottage cheese or something, and they would buy it for you without you ever requesting it. I mean, obviously you would have to set up the weekly or the weekly thing, but maybe this time you didn't want another one, for example, or maybe this was a one-time purchase. So think about the fact that it's going to be much more autonomous decision making, and you need to be very careful if you are using agents to handle some of your payments, how you actually define them and how you make sure you put the correct guardrails in place.
And you're in the chargeback industry. How are you approaching this? How are you kind of thinking about because chargebacks is a big enough issue as it is right now.
Yeah.
So how are you spinning plates of friendly fraud on the rise, economic issues are causing more fraud, and then you've also got to think about what's going to come next with agentic. How are you spinning all these plates?
Well, to be honest, at the end of the day, responding to a chargeback is only the last step of the workflow, right? Because it starts when there's a purchase. As a merchant, whenever you receive a purchase, then the clock starts, or even before that, because you've got all the fraud prevention solutions in place. But let's say that someone actually managed to go through the fraud prevention screening and they made a purchase. This is when the clock starts, right? Because already then you have somewhat of information to be able to do decisioning, which is mostly based not on fraud signals, but on other signals, which this is the main reason why it slips through the fraud prevention firms. And by the way, they are all working on improving it, right? So the fraud solutions know that they are working to improve this behavioral parts, but let's say that someone made a purchase, right? Let's say that I have a lot of data on a lot of merchants, a lot of purchases, and I see this email, this mobile, this credit card interacting with other merchants and doing something bad. Either, having very tough discussions with the customer support, or filing a chargeback, or claiming fraud, or, doing a fraud, return abuse or something. Then I have some indications to know that you just approved a purchase that might go south, and you should reconsider it. The fact you proved it, that's fine, but you could always refund it and at least not lose the product or the chargeback fee and the operational time to deal with it. So you're going to have an additional layer of data, of information that would allow you to basically take a better decision on what should become with this payment. And this is a very important part, because think about it as a graph, right? When you have an email which is connected to an address which is connected to something else, and you can see somewhat like of a graph of all these entities, how they are connected with each other. And the more information, the more data that you have, the more connections you make, the better the accuracy of this model would be to predict what is the probability of this payment be something negative. Just in a simple example, bad reviews. Let's see that someone purchased with you, and this someone is oftentimes on LinkedIn, on Facebook, on Twitter, whatever, putting bad reviews on merchants. Would you like to sell them? Well, I mean, it's up to you. It's up to your risk appetite, but maybe at least you should be aware of the fact that someone that just made a purchase, and this someone is quite vocal online when something goes south. So do you want to take this reputational damage? It's up to you, but at least have the information in it. So I think that the more we go forward, first of all, you would have to look at it as a platform rather than a single solution. It's not only about chargeback recovery. It's also about alerting. It's also about providing some sort of insights or explainability layer on top of it. And yeah, this is the way I see it. Right. So as I was saying, the more information you have, the better decision you can make based on it. If you are connected to some sort of a consortium of information, and there's a model in place that is able to aggregate features, it could provide you with insights to take a better decision of whether or not to get it. And a lot of these are only signals that you can see post-purchase rather than pre-purchase, which means that the risk prevention companies, some of them are lacking these data sources. Some of them. I'm not saying obviously all of them.
Yeah. So more data, more information, which takes more processing power, more time. And then you've got the other end of the equation where payments are getting quicker. People want things quicker. We've not even talked about stable coins and kind of the speed of crypto payments.
Yeah.
So it feels like there's two forces pulling away from each other. How are we solving that? Where does technology come into it?
Absolutely. Well, at the end of the day, we're talking about fast, but let's keep in mind what fast means, because velocity is relative. So fraud prevention companies usually have somewhat of a few milliseconds to take a decision, because you really do not want to affect the purchase. But post-purchase, you can have up to minutes to take a decision, because let's say that you actually process the payment. There's nothing preventing you from waiting a minute, for example, to deliver the solution. I mean, if it's a physical product, then obviously you've got even more than that, because you have to actually wrap it and ship it, and obviously it takes time because it's manual work. It's slightly worse. It's with SaaS options, because usually when you buy something online, then you want to get access to it the minute you get it, right? But still, you could have 10 seconds. That's more than enough to take a good decision and get some sort of identification of there's something suspicious. Let's have a look at it before we decide to fulfill this to the end.
And it doesn't really affect the experience, 10 seconds. If you've already paid and you feel that you paid, you believe that you paid and it's coming, then
Mhm.
10 seconds is nothing, right?
Well, I assume it depends on the person itself. 10 seconds is just a number that I chose it.
Yeah, yeah.
For example, I mean, I'm not trying to market anything, but we have a similar product and we take a decision in less than a second, and it's a post
Mhm.
payment. So 10 seconds was just a number. But yeah, I mean, at the end of the day, everything is pros and cons. The question is, what is your risk appetite? How much are you willing to risk? And obviously, as time progresses and technology progresses, everything's going to get quicker, even the
Mhm.
post payment solutions. But it's a valid claim.
And what, in theory, what would be the kind of silver bullet? Something that would solve it all is probably not possible, but in theory, what would solve all these issues?
Well, I'd say that you're going to have a direct communication between the merchant and the issuer.
Mm.
Because nowadays everything goes through a funnel between the merchant, the PSP, the acquirer, the cardware network, the issuer, and then the cardholder. Let's say that something is wrong and you have data sharing in real time, then whenever the cardholder starts a dispute process, they actually complain to their bank that something is wrong, immediately the issuer will not need to reach out to the merchant and wait for the response. They will be able to look at the data which is
Mhm.
shared and see, okay, I see this payment and see all of this additional information that usually sits only with the merchant. Now it's exposed to me. I can look at it and I could use it to make a decision whether or not to open a chargeback, yes or no. And if I feel that I still need to open a chargeback, then a chargeback wouldn't be open, but there's just going to be a direct communication between the issuer and the merchant to resolve this matter. So sort of
And
like to cut the whole structure of a chargeback, how it go through the system in the middle.
sounds like a great option. What's holding that back?
Well, I'd say that money. I think that everyone benefits somewhat
Mhm.
financially from the chargeback current process. And it's about making sure that all parties are aligned and they would like to sit together on the same table and just make the process better. But yeah, I guess there are different sources that, pulling to different sides, and each party has their own goals when it comes to, fraud and chargebacks. I think it's just a matter of time until someone manages to take all of the parties to one place and have a discussion and reach a certain conclusion that would be able to make this happen. I mean, you have some somewhat um, similar products or services like and and order insights and consumer clarity, and they provide some sort of an additional layer of information to try and
Mhm.
resolve the dispute before it turns to a real chargeback. But then again, it's just a step on the way. It's like an evolution of this.
Mm.
Um,
Two questions or 2 points to kind of close out with.
yeah.
So within the chargeback ecosystem, what are you concerned about or cautious of that's going to happen in the near future? And then what are you excited about in that space? And we'll start with the negative. What are you cautious of?
Look, the whole agentic commerce, it's somewhat still of a black box. Nobody knows
Mm.
exactly how it's gonna happen, how it's gonna affect each party. And as any other new solution, it would have a lot of issues. It would need fixes. It would need versioning. And as always, the fraudsters are gonna be the first one to jump on the train and find the weaknesses, and then someone would
Um,
fix it. So you're gonna have a lot of, maybe not a lot, but you're gonna have somewhat of a chaos when you
yeah,
when you launch this on full scale. But this is also exciting because it means that we are progressing, we are moving forward to a more technological places, and generally speaking, just making our lives maybe slightly more effective or efficient. And this creates a lot of opportunities because every crisis creates opportunities. So
yeah.
the more technological we get, the more advanced we get, we're gonna have to be aligned with our solutions. And this is also exciting. I mean, just I remember that back in the days when I actually used to prompt agents to do stuff on behalf of merchants, and now it's much more complex than that. But it was fun.
Mm.
It was fun to sit down and just have a conversation, so to speak, with someone. Back in the days, I used to train analysts, chargeback analysts. It would take me maybe 4 to 6 months until someone was really adequate in their work, knew exactly what they should do. And with an agent, you can do it nowadays in like 2 or 3 weeks to get them to a certain place in which you know for sure they're going to get at least as good as a response as a human. So look at the time frame between these two. So I assume in the near future, it's going to be much quicker than that. It's going to be you perhaps having agent training other agents and so on. So we are already in the midst of using this kind of agentic workflow. So yeah, this is what I see excited about this.
Yeah, what a time to be involved. 'Cause it's crazy, right? Because there's going to be life is going to be so seamless. So we could be sat here and we just say, hey, whatever you want to call your agent, I want this for lunch, I want this for dinner, and I want to do this at the weekend. Can you book that? Can you sort that all out for me?
Yeah, absolutely.
And there's so many steps in there, and with all those steps, there's going to be someone taking advantage. That's where the fraudsters will come in. So we need to get watertight in this space.
Absolutely.
Ben, it's been an absolute pleasure. Thank you for joining.
Thank you for having me. Thank you so much. It was real fun. Yeah, and hope to meet soon again.
Yes, I'll see you at the conference.
Amazing.
Also, ciao, ciao.
Ciao. Bye-bye.
Want to hear more about fighting fraud with tech? Subscribe to Leading Detection wherever you get your podcasts.